Hi, Dan.
Lashana Tova, Bob.
Exactly. My sentiments exactly. It is a holiday, is it not?
It is. I am violating God knows how many, Judaic laws by agreeing to do this, blogging heads, as Rosh Hashanah starts.
I was wondering, after I asked you if you wanted to do it, I started feeling guilty about that very thing.
Well, no, actually, if I'm Jewish, I'm supposed to make you feel guilty. I just want to show that, once again, pundits are working harder than Congress.
Not hard to, you're not setting the bar very high there. So yeah, we are, I should say that I'm Bob Wright, you're Dan Dresner, the world-famous blogger and professor at Tufts, and you're not an economist, but as a political scientist, you do study the world economy, and you follow all this kind of stuff.
Yeah.
And so I called you on short notice to try to get you to illuminate for me the day's really potentially historic events, right, with the failure in Congress of this vote for the so-called Paulson bailout plan.
Paulson Plus, I think, is what it is. Is it Paulson Dodd-Frank now, or, who cares? I qualify myself, I describe myself right now as pretty freaked out. I think it was, the markets fell, about 8%, a little more today. The TED spread, which is the gap between...
What is the TED spread again?
The TED spread, I believe, is the gap between the interest rate charged on T-bills and the London Interbank Offered Exchange Rate, which is the rate, or LIBOR, which is the rate that banks charge each other.
And the higher it gets, the closer we're getting to a point where just basically no one will lend anybody any money and the economy freezes up?
Right, bingo. Ordinarily, I think it's less than 50 basis points. I think it was over 300 at this point, and it shot up by 20% today as a result of what happened. And that's actually, the natural tendency is to focus on what do equity markets do in response to something like this. But what really matters, and the thing that's really the major source of concern, is that it's becoming ever more expensive for corporations to get access to capital.
Right. Now, that's a big difference between the last thing like this that I remember, which I think was 1988, when there was just a huge drop in the stock market. At that point, the only contagion I heard people worry about was in the equity markets, right? Globally, stock market after stock market will plummet. I don't recall anybody talking about a contagious effect among financial institutions that would have this whole other order of trouble for us, right? So this is fundamentally different, or am I misrecollecting 1988?
I think it was 87.
87.
And yeah, I mean, to be fair, in 87, I think the stock market lost that one day fall was actually much greater as a percentage of the
percentage-wise. It was, yeah.
Yeah, it was. The difference this time, there's a couple differences this time. The first is that it's not just the U.S. Obviously, it's the markets are interconnected. So I'm very curious to see what Asia winds up doing as a result of all this. In the next couple hours. The second is that this is...
My latest update is that in Japan, the market fell by about 4.5% right away, but then did seem to stabilize for the last, hour or two. And it's a flat line after it drops 4.5%. But anyway, that's old news by the time they hear this, so go ahead.
Yeah. The second thing is that, this really, again, is not just so much about the equity markets, it's about credit markets. And it's about the fact that... basically, the ability of banks to lend money, or the willingness of banks to lend money, period, or of any financial institution to lend money, is starting to sort of dry up. Mm-hmm. And yeah, I'm really concerned. You're starting to see runs on banks. That's the thing that gets me a little tricky, a little tetchy. WAMU was taken over last week. Wachovia was taken over today. Europe had to inject money into Fortis. The Germans had to bail out a bank. The more people are concerned about what, the valuation of financial companies' assets, the more likely you're going to see a run. And that, I have to admit, freaks me out. And I have to hereby apologize to Rosa Brooks, because Rosa and I had an exchange. We had a Blogging Heads, I think, earlier this summer, where she was freaking out, and I was trying to calm her down. And I'm with her now.
Yeah, well, you were just probably trying to sound, cool and calm.
Yes.
Under pressure. It's natural to try to impress women that way, but you can be honest with us now, because I'm not a woman, Dan. You're scared, aren't you?
I'm a little wigged. I mean, look, let me be clear. I really hope that the people who voted no were right. That it turns out that warnings that were that this was necessary turned out to be wrong and wildly exaggerated, and in fact the markets, while taking a hit, in the end soldier on, because that actually is the best. Unless Congress decides they want to revisit this, that actually is the best thing for the country. If it turns out we don't visit another massive financial panic. On the other hand, I'm pretty skeptical that that's the case. I've been reading too much Nouriel Roubini. That's part of my problem at this point. Nouriel is known as Dr. Doom, and he's talking about things like general financial crisis panic.
But Dan, I'm having a little trouble hearing you. I'm going to switch headphones here and see if that miraculously makes a difference, okay? Hang on one second.
Sure, no problem.
Okay, that's part of the drama that is Blogging Heads that just happened right there, and we'll see if it helps. I think I am going to be able to hear you better. Sorry.
That's no problem.
That is better. That is better?
Okay, good. That was impressive real-time, technical support there, I got to say.
I'm cool under pressure. That's why you're going to turn to me for moral support at this time of crisis. But tell me something. Do you think this is too hyperbolic to say that it's possible? I'm not saying it's likely, but it's possible that what Congress did today will go down in history alongside Smoot-Hawley as at least having the reputation for having ushered in an actual great global depression. I mean, that seems to me, the scary thing is not that I think that's likely, but that's actually possible.
Look, I think you can put it I think it does belong in the realm of possibility. I do think, look, my understanding is that Congress can still revisit this. And this is what I was posting about today. I think part of the problem with what's been going on has been the politics of the situation, and there's a whole variety of things going on. But to be fair, let me make the most sympathetic version I can for the people who voted no, which is the following. Over this past calendar year, the U.S. government has helped Bear Stearns, been taken, helped to take over Bear Stearns, interceded on behalf of Fannie Mae and Freddie Mac, and interceded on behalf of AIG. And now suddenly, despite all of those things, the market's still a-tumbling.
Right.
So as a result, you've got the Treasury Secretary coming in and saying, hi, I'd like $700 billion, please, and I'd like to do, what I do with it as I see fit. The problem is, they're being warned, if you don't, we will experience unmitigated disaster. And as I said in the blog post, part of the problem with this is that politically, if you vote in favor of this and you avert the catastrophe, you can't claim you averted a catastrophe.
Right.
You're going to say, we did this to avoid a panic, and the voters are going to think, what panic? We didn't see a panic. This is the politics of counterfactuals, which is, and the parallel to this is 9/11, which is, let's say that, the Bush administration had taken decisive action, decided to invade Afghanistan in April of 2001 on the basis of intelligence that they were going to attack. If that had happened, and if they had succeeded, no one at that time would have said, thank God the Bush administration acted this way. Because no one could have conceived of 9/11 happening, and everyone would have said, how can you do this? You're engaging in rampant unilateralism, and using force to solve a problem. So it's only after 9/11 happens that the country is ready to take actions to prevent 9/11.
But in this case, it seems to me a slightly clearer situation of the flip side materializing, which is that if the apocalypse does ensue, the people who voted against this may be in significant trouble politically.
Right, which is one of the reasons why I'm wondering if the House is going to revisit all this. Because in some ways, what they get to do is actually try the counterfactual out. So they said no. What was the market's reaction? I would safely characterize it as, quote, not good, end quote.
So far, but because of the holiday, Congress is not going to meet for a couple of days, right? And we're going to see. It's an interesting experiment. What the market does over before Congress meets again on Thursday, and meanwhile, of course, it'll partly depend on what politicians do. If tomorrow you see some sort of bipartisan show of determination to get something or other done on Thursday, that will matter, right?
Actually, I'm going to say no at this point. How many bipartisan show of determination have we had over the past
They do
week?
start to lose credibility after a while.
I was talking with a reporter yesterday who was asking me about this bailout package, saying, what do you think? And I was like, I'll know what I think when it actually passes, because I was pretty skeptical about it. So, to some extent, for this to actually go through, it can't just be a show of bipartisan support. It's got to be a massive, overwhelming, shock and awe massive, demonstration of bipartisan support.
Well, what would that be like? McCain, Obama, Bush, Pelosi, who else in the... The scary thing is that there seems to be more bitterness between the parties after the vote today.
Well, right. I have to admit, I do love this argument that... And let's face it, I really do think you can throw blame on just about everyone involved in this. I mean, the House Republicans, the majority voted no, so to some extent, clearly they, failed to get on board. They claimed this was because I think Nancy Pelosi gave a partisan speech in damning the Bush administration. I give Barney Frank props for this, for saying, so let me get this straight. They voted no because of hurt feelings. I mean, that it doesn't quite work.
I'll tell you, if this crisis has no other redeeming features, we will have the fact that Barney Frank has delivered a number of really good lines over the last few days. A couple in reference to this. He's an unusually smart and entertaining person.
And he is my representative, you should know.
Is he?
Yeah.
Well, you're a lucky man.
Well, we can debate
so the politics at the moment...
Wait, I haven't finished blaming people, Bob.
Okay,
there's
sure.
more
it's a
people
long
to blame.
List, right?
There's no question that you can blame the Republicans. On the other hand, this is the House. The Democrats control the House. And unlike the Senate, this isn't a situation where you need to, have a filibuster-proof majority. If the House had wanted, if the Democrats decided that we've got to do this, Pelosi presumably could have, twisted enough arms. So, she was the one in charge, and you also, she didn't quite get enough of her party.
But can I push back on that a little? I mean, the Democrats, unlike the Republicans, did get a majority of the people in their party to support the bill. And if ever there was a kind of bill where a reasonable expectation is that, look, we either do this together or we don't do it, right? I mean, when there's this much potential political blowback for doing something that people are arguing is in the vital interest of the planet, it seems to me fair for either party to say, look, either we do this together, we will do our part if you do yours, and in this case the Democrats did their part, the Republicans didn't do theirs.
I would say the following. I think to some extent you're correct, although again, you're right. I mean, I think it was Daniel Patrick Moynihan who once said you can't pass any major legislation without two-thirds of support, and anything involving $700 billion is probably going to require that. On the other hand, I will say this. After today, given the effect of the no, you would think the House Democrats actually should be able to say, okay, this is now the good of the country sort of situation. Screw the Republicans. Let's just amass enough support and vote, and scare up another vote.
Now here's where I was doing thought experiments and thinking, what if Obama? I mean, the initial reaction to this will be, no, that's crazy. But suppose Obama stepped forward,
that's
and
the
said,
thing I've been going. Yeah, I agree.
And said, look, I think John McCain and I should, we should shift into gear, see what we can do. The first thing we should agree on is we're not going to talk afterwards about who gets the credit. We're going to discourage any discussion over who was the key player. I think we should both step in, and what I'm going to try to do is get enough Democrats so that we can pass this. I mean, at least maybe he shouldn't announce that part in advance, but he should step in and try to do it.
If he's not doing it, then I would actually be surprised. I mean, if I was Obama, the thing I would be doing right now is calling every House member who voted no and saying, what is it going to take for you to vote yes?
Yeah, but the irony is everybody is claiming that voting yes is a political loser. Now, of course,
I don't buy that.
My great gripe about politicians is their total inability to imagine ever educating the public about anything, right? I mean, they look at the latest polls on this and think it's inconceivable that you could step forward and exert leadership and change anybody's mind about it.
Well,
but what do you say to that reaction to what we're suggesting, which is that Obama step forward and say, look, the Democrats can do this on their own if it's in the nation's interest. What do you say to the reaction that, wait a second, this is supposed to be a surefire political loser to vote for this thing?
I would say a few things. I mean, first of all, at this point, I'm not entirely convinced it's a dead bang political loser. Again, remember, part of the problem has been that to date, how has this been described? It's been described as a bailout package. That is the absolute worst line you want to use for this sort of thing, because that, if you poll the public saying, hey, Congress is about to vote to bail out Wall Street, do you support or oppose this sort of thing? Of course you're naturally going to have massive opposition. On the other hand, if you call it a financial rescue package or measure for economic security, Nate Silver had a good post on this. suddenly the numbers start to swing radically differently. Furthermore, after today, it wouldn't shock me if public opinion also starts to shift on this, which is once the public realizes, oh dear God, you mean actually markets could melt down?
Right.
Then that actually has, could have a different effect. Although here again, this is where I would actually say Obama bears some of the blame, because think about what he said in the debate last week, where he tried to talk about Main Street versus Wall Street. And on the one hand, I can understand why, it's an economically populist theme. Sure, go with that. But one of the effects of that, I think, is that a lot of people on Main Street think that what happens on Wall Street doesn't affect them. Or won't affect them.
Yeah. I mean, at the same time, he said, and here's what I would need in the bill to protect Main Street, and it has it in it. And so, I mean, maybe that kind of rhetoric is kind of vaguely destructive. I wouldn't say it's really appreciably worse in that regard than McCain's rhetoric.
No.
And certainly McCain's decisive intervention last week doesn't seem to have saved the day.
Bob, I completely agree. I'm not saying McCain gets a free pass on this, but I'm saying that I haven't heard anyone critique Obama on this, and I actually do think he deserves a little bit of a critique on this.
Well, it would be fascinating if he stepped forward now, especially because he doesn't seem to be the one of the two who needs to take a big risk right now, right? And yet, at the same time, what I'd say to him is, this whole situation is turning, I think, the politics of the election is making the politics so fluid that if I were him sitting on a 5-6 point poll lead, I wouldn't take anything for granted. I mean, we're entering a chaotic period, and it may be that the guy who wins the election is the guy who somehow, comes out of this looking like a winner. I mean, remember, it is possible, conceivable at least, that McCain could be the guy who now steps in and says, okay, Republicans are the problem. I'm going to whip them into shape. Maybe they see tomorrow's headlines and go, "Oh God, we are, bringing on the apocalypse." And he steps in and saves the day. I mean, if I were Obama, I would be at least thinking that this is an opportunity for McCain that you might want to kind of preempt by getting out there first. Not in a way that is destructive of the process, but in a way that guards your flank a little against that kind of thing.
Did you read? I think Patrick Healy had a New York Times story today on the different sort of leadership styles of both McCain and Obama over the past week, where Obama stayed in touch. He was calling Henry Paulson a couple times a day, keeping in touch with Pelosi, keeping in touch with Reid, talking to other members of Congress. Whereas McCain was a little more impulsive, was actually taking what he thought was decisive action. I think I have to assume that right now Obama actually is doing what you're saying, suggesting him to do. He's just doing it in a way that we don't hear about it yet. And, this would actually be of a piece with Obama, because my guess is that if he can't get the votes, you're never going to hear about it.
I mean, what he could do is say, look, if the Republicans will at least freeze their vote, Obama only needs to change 12 minds. If everything else stays in place, and one part of the Democratic constituency that didn't go for this is the Hispanic and Black caucus. You would think he would be capable of changing a few minds in that department.
One would, the Black caucus, I'm not necessarily sure about the Hispanic caucus.
No, but you pick up a few right there, and you're well on your way.
That would probably be true. I mean, there are two different ways I can see this being gamed out in a couple of different ways. The first is that if Obama does that, do more members of the GOP then defect? Because that's entirely
But politically, that's a winner for him. I mean, right? If that happens, he has done all he could do, right? So I would say that's not a political risk for him.
Oh, I disagree. I think it is a political risk.
Wait, if he steps in and says, look, I'm going to try to increase the number of Democrats, and I encourage John McCain and anybody else to try to increase the number of Republicans, and he increases the number of Democrats, and McCain can't increase the number of Republicans, that's not a political winner for Obama?
Potentially. The problem, though, is that if in the end it's a failure, it's a failure. And Obama's going to get some of the blame along with McCain. You can argue that, look at it this way, I think the best outcome, if I'm advising Obama, I wouldn't actually try to issue a joint call. I would just literally work the House Dems until you guarantee that you've got 14 pickups. Then I would announce it and say, we're going to have another vote. I encourage Senator McCain to try to hold his caucus together.
Yeah, but I would say two things. First of all, if you are going to... I mean, there may be some tendency for the Democratic support of this to erode, depending on how the conventional wisdom congeals tomorrow and what the foreign markets do and so on. That could happen. And I would say he has a better chance of heading that off if he goes a little public about his effort and convinces the Democrats that this is a concerted effort that bears on the outcome of the November election, A. And B, if he steps forward, he has the potential to actually influence the international reaction to this in the markets, I think. Ideally, you would... Well, go ahead, sorry.
I think the problem is, I honestly don't know the answer to this, which is I don't know how much sway Obama commands over the House Dems. And that's really, I mean, as you said, if a significant number of the Congressional Black Caucus, were on the no side, maybe he could influence them. I honestly don't know. But bear in mind that we've had a week during which various high-profile figures keep saying, we've got an agreement, we've got a compromise, we've got an agreement, and in the end, not so much. So, if Obama is being very cautious about this, and that's how he's been the last week, he's not going to say anything unless he's damn sure he's got the votes. And by the way, I mean, McCain should be pursuing this strategy as well, though he should be doing it behind the scenes, which is, you announce that you've got the votes once you actually have the votes. So, I mean, that might be one tactic. Again, part of the question is, how do the political optics look 24 hours from now? Which is, if markets continue to cascade downwards, then suddenly the incentive to get something done changes. Mm-hmm. And so, think about it. If you're a politician, if you're either Obama or McCain, your optimal time to strike is right before the moment everyone realizes, oh, wow, we have to do something. But that's also a little risky.
Well, or right at the first flush of actual panic. I mean, when everybody realizes it, and then right around that time, yes.
Well, I have to ask then, I mean, wouldn't you describe today as panic? I mean, given what happened in the markets, admittedly, not a 20% decline, but still a pretty damn big decline. And again, it's credit markets.
You could look at it either way. It is big. It's not as big percentage-wise as 87. It's big. I mean, I did... A lot of it depends on what the foreign markets do.
It's also the credit markets.
The other thing is and this is where you know the stuff and I don't at all, but like tomorrow and the next day, what will be the visible sign? Leave aside the equity markets and what the stock markets do. We all know how to track that. What will be the visible signs tomorrow and the next day in credit-related activities? I mean, it's not going to be like I, as a homeowner or credit card owner, am going to feel anything directly right. Who's going to start feeling stuff first?
Look, it's going to be banks trying to get money. I mean, I would say look at the TED spread. Look to see if there are any more banks that wind up, needing suitors to buy them out.
So more institutional collapses is the first sign. More contagion in the collapse of institutions in the financial sector.
The other thing is, and this is an inverse signal, but I think it's not a bad one, is how far does the price of oil fall? This is the one good thing about all of this, which is...
Why is it that the price of oil falls when the apocalypse... because nobody buys oil.
Because no one needs oil.
Nobody goes anywhere during the apocalypse.
Yeah. I mean, the point is that, remember, the reason oil prices have gone up by a lot, I mean, there's a variety of factors, but one of the biggest ones is demand, which has been surging because of a surging global economy.
Yeah.
The more the global economy looks like it's headed into the tank, the less demand for oil there is.
Oil goes down, gold goes up.
Yeah.
And everything else goes down. So, so banks collapse and kind of then what? I mean, here's the thing, is like the premise of this bailout is almost that the federal government has infinite resources, It's like you quit counting sometime before $700 billion, right, in real terms. I mean, it's almost $700 billion is just like the government saying, look, we can do whatever it takes and we're now vowing to do it. So if that's kind of the case, why can't they just handle all the bank collapses the way they've been handling almost all of the institutional collapses so far?
That might be one. I mean, look, that's another potential way to go. And I mean, one of the arguments that I've heard put forward is, I mean, a lot of different economists have basically said, look, there's better ways to do this. Luigi Zingales has, Paul Krugman has, Brad DeLong, a bunch of them. And I don't want to comment on whether they're right. I mean, that goes beyond my realm of expertise as well. Their proposals might very well be better. But the point is, none of them are members of Congress, and none of them is the president. So it's entirely possible that they're right. Whether or not they're politically feasible, on the other hand, I have no idea. So that's the first thing. The second thing is that again, if banks stop lending money out, if banks stop lending money out, then basically private investment shrivels up. You're going to see the savings rate will go up, which I suppose is a good thing, but consumption is going to go way, way down, and you're going to see a massive contraction of the economy.
Yeah. I mean, you could also see, the other thing you could see, it seems to me, is consumer-level panic. I mean, for example, the government has said, when we had that scare a week or two ago about when people realize that money market accounts are not insured and...
Whoa, wait, let's be clear. Money market funds, not money market accounts.
Oh, sorry. Money market funds that are part of your mutual fund portfolio. Most consumers don't have
money market funds. What?
These would be part of your mutual fund portfolio like at Fidelity.
Right.
And so this is another case where the government just kind of stepped in and said, we can do anything. We're going to insure all these,
Right.
And I guess that stopped for the time being any run on those. But there was at least one case where people in one fund had lost a penny on the dollar.
Yeah.
And
it broke the buck.
And what do you see panic of that kind,
Say that again?
Or massive sell-off of the cascading sell-offs of mutual funds, by the same people that would create this kind of parallel slide in the equity markets. And so I don't know. I'm just free-form catastrophizing at this point.
Well, you've just given the title for this: free-flowing catastrophizing. That's got to be the name for this. I mean, I would say, look, part of the thing, which, and this is really an interesting question. I honestly don't know the answer to this. Is to what extent are the credit markets and the equity markets pricing in the notion that the government's going to intervene? And you might argue that one of the reasons why things, were bad last week but not awful was the expectation that there was going to be a bailout package.
Yeah.
And the question becomes, if there's no bailout, and it's still not clear if markets have completely ruled out the possibility. So,
I think they haven't quite.
I don't think they have, but I think they've taken the probability and lowered it significantly, which is why I think markets responded the way they did.
Very much.
I mean, if you really wanted to have this experiment if you really wanted to run this experiment, what you would have to do is have Pelosi and Bush and everyone say, there's going to be no bailout, and then see what happens. I don't think that's going to happen.
No. But and I should say, I mean, the reason your panic is alarming, not your panic, the reason your alarm is alarming to me is because you are, I would call you a moderate libertarian, not a hardcore libertarian, but you are... libertarians have a certain faith in the ability of markets to right themselves, And all right,
I mean, and my response is yes, this market would right itself. On the other hand, it would take a long-ass time, and there would be a lot of people out of work during that time. Yeah. I mean, this is the difference between being a libertarian. This is the difference between, someone who wishes an ideal utopia where the government doesn't intervene versus how we actually have to deal with the real world. I don't think anyone doubted, for example, that the federal government had to step in on Freddie Mac and Fannie Mae because the implicit guarantee was issued by the government.
Mm-hmm.
This is perhaps a little bit different because it's a question of how whether or not the government should step in to try to buy this private, this sort of toxic debt, or there's a different way of doing it. But the fact is, no system is pure in terms of being a free market, and the U.S. system certainly isn't. So,
well, and even a free market is, first of all, always subject to panic, and B, we are learning now that the way mortgages have been securitized has led to a kind of interlinking of institutions that creates a new potential for contagion of the kind we're seeing among financial institutions, right? I mean, the irony is that ostensibly what was going on is that we were distributing risk throughout the system, right? Mm-hmm. And yet, what it turned out to do was in some sense raise the aggregate risk in this, or it made default more contagious.
Yeah. Well, I mean, and it's all yes, and part of the other problem is for markets to work. The real one of the big problems, and one of the reasons why this is drawing out so long, is that no one knows how to price this debt. No one knows how to price a lot of the sort of toxic debt. If there was an actual price put on it, then every financial institution would have a better sense of how healthy every other financial institution is. But since for some reason no one's doing that, the market for this stuff doesn't exist. And so to that extent, the government is stepping in and saying, look, we'll buy it. And in some ways, I mean, basically the U.S. government is proposing acting like a sovereign wealth fund.
Right. But the irony is there, as I understand the dynamics, I haven't heard it put quite like this, but when the government, says, okay, we'll buy it, just by saying that, it actually raises the price of the assets. It raises the price that it is going to have to pay, right?
Well, since they're the only
because the reason nobody will buy the assets now is because they're afraid the government's not going to step in and keep the whole economy from going to hell. Once the economy says, no, we're going to come in, once the government comes in and says, no, we're going to put a floor under this, then the assets do start to become saleable and their effective price rises, I really think.
It's possible. I mean, there's a reverse effect as well, which is if the government is the only purchaser of this, then they have monopsony power, which means presumably they could set the price whatever they want. Although they obviously, they have to set the price high enough so that the effect is that the banks actually have greater liquidity as a result of this. So, but I mean, go ahead.
Well, I was going to say, I think Warren Buffett kind of illustrates the point I'm making. I think his investment in Goldman Sachs was premised on, and he said as much, I think, because he said that the bailout was going to work.
Right.
And so he reevaluated the value of, here was an institution that was saddled with a certain number of these bad assets, but he said, no, wait, it's actually worth something after all if the government's about to step in.
Right. Except if the government doesn't step in, whoops.
He made a bad bet, yeah.
The other thing to look at, you were asking before in terms of crisis, what really could happen, things that would be really bad. The other thing to look at is to what extent do foreign, holders of U.S. debt start deciding, oh, sweet Jesus, we got to get the hell out of here.
Yeah.
Although, to be fair, it's more likely what would happen is that they would get out of certain forms of debt and go into others. Yeah. Part of the reason now that you've seen the yield fall on U.S. debt, on U.S. Treasury debt, is because that's seen as the only thing that's actually still safe, and there's actually, the U.S. government will pay out.
Speaking of which, couldn't the Chinese government afford to do this bailout thing for us? They've got a lot of U.S. dollars.
They do. They have more than $700 billion. They could easily agree to do this. There's no chance in hell they're going to.
The irony is that we would panic over that, right?
Yes, I have to admit,
we'd really freak out. That might get Congress to actually do it itself.
Bob, I like the way you're thinking with this.
Yeah.
That would be very clever. Bush could announce that if Congress doesn't buy it, that the Chinese will.
He's going to sell it to the Chinese.
That's fascinating. That could happen.
So, now, there was tell me if I've got this right. There was this a guy named Arnold Kling was on Blogging Heads, and he did this very illuminating conversation with Will Wilkinson, and I understood a couple of things for the very first time. And I should say, incidentally, that he has his own proposal. He hates the Paulson Plan. This was a few days ago. He said the short-term thing to do, and you might ask, why don't they just do this tomorrow? He said relax the lending requirements on banks, like the capital requirements and the regulation. It sounds like you could almost do that without Congress, and he says that would free up capital and solve the short-term, or at least a portion of the short-term crisis. So first of all, I'll get back to the other thing I learned from him, but have you heard anybody saying that? Is that anybody's plan?
I haven't heard that. I have to admit, again, I always am prefacing this by saying, he might be right. I'm not sure. My gut reaction to that is the following. The problem isn't that banks don't have capital to lend. It's that they don't want to lend until they know what the value is of the other debts that the people they're loaning to have. And if you actually lower the capital adequacy requirements for banks, then, that might lead to a short-term it could in theory lead to a short-term burst of lending, except then you've got banks that are even more extended than they are now. So I'm not sure how that works.
Yeah, I mean, he may not have only been talking about banks. I know in some sectors he was saying that supposedly one thing that's starting to happen is as you get these defaults and these banks have to write down the value of their assets, then they bump up against the requirements, the capital requirements, and are not allowed to lend. Right, and I think that's the type of dynamic this would be a partial solution to. I don't know that that's just commercial banks per se.
No, it's not just commercial banks. He's talking about. I assume he's talking about other. Well, there are no more investment banks, so we don't have to worry about that.
Right. And as we learned, they actually weren't investment banks anymore anyway. Yeah. That's not the business they were in anymore.
That's a possibility. I mean, I see the logic of that. The problem is, again, I'm not sure that these banks are going to be willing to lend, even if their capital requirements are lower. But it's a possibility. As I said, I'm not entirely sure. But what's the second thing that he said that enlightened you?
Well, the other thing, and then I'll let you go. We've scared each other enough, I think. But what kind of depressed me is when he described how this problem built up. It became clear to me that tons of people knew. When you describe the basic dynamics of the situation, it's so clear that we were headed for a fall because, for example, just to take one little piece of the puzzle, I guess 10, 12, I don't know how many years ago, suddenly people started giving mortgages with very low down payments, okay?
Yeah.
Like in the old days, it's like 20%, and that's a pretty secure situation because if suddenly you can't make your payments, well, so long as you can sell your house for at least 80% of the value, you don't default, right?
Right.
And so now we've got these people where if you can't make your payments and the value of your house drops slightly, you're in serious trouble, and so are the people who lent to you. And moreover, the fact that suddenly we're making it so easy to get mortgages is inflating the value of real estate in a way that makes it inevitable that the day is going to come when there is a sudden drop in real estate prices, right? So you've got this combination of circumstances, and that's just the tip of the iceberg in a way. Then this whole other set of things happened in terms of well, I won't even get into it. A lot of things happened, but my point is, you know that there were people trying to get the attention of politicians. I know, I have talked to people who were trying to. Mm-hmm. And the fact of the matter is that it's almost impossible to get the attention of anybody in Congress unless what you're saying is relevant to the chances that they will get reelected, right? Is that too cynical?
No, that's what political scientists assume.
Yeah. Well, I'm glad I validated your theoretical framework.
Well, no, this is always the great irony. Is that when political scientists are always shocked when not political scientists, but a lot of people are always shocked when politicians act in such a way that the only thing they're concerned about is re-election. And this is the standard assumption in political science.
Yeah,
we assume the only thing that matters is that they want to get re-elected. On this point, you're right. And remember, the effect. Think about Fannie Mae and Freddie Mac. The lobbying effect that these two institutions alone had on both parties in Congress was significant. And the fact that both presidential candidates have had to sort of try to brush off, advisors who have had ties to these groups is illustrative of that fact. I will say the following, though. Part of it is that everyone knew that there was housing prices were ramping up pretty quickly. And yeah, I think there was an expectation, 4 or 5 years ago, that they were probably going to go down. What I don't know if people expected was they were going to go down as far as they've gone. Or that also that it was going to have such systemic effects. In part because the U.S. had continued to have access to such cheap capital from overseas.
Right.
And this was the Bernanke point, was that part of the reason you saw the housing bubble start up 10 years ago is that there was no other place for this capital to go. And so as a result, Americans basically got a huge whopping subsidy to try to take out their mortgages. Problem is that it then led to housing prices going up, which then led people, and this is the fatal mistake, to assume, housing prices are going to continue to always rise. This is the right thing to do.
Right. And increasingly the health of the system was premised on their continuously rising.
Yes, and that's always, but in the late stage of a bubble, that always happens.
Yeah,
I mean, we could have gone back 10 years ago. We'd be talking now about, well, come on, aren't we in a bubble in terms of stock prices? And you say, yeah, but it'll solve itself. It'll sort itself out relatively easily.
Well, that one did relatively easily, actually. The 2000 bursting, year 2000, compared to what we're looking at now, I think. But this leads to something I've wondered about, is to what extent, I've kind of wondered throughout the financial crisis why Obama has not tried to blame the deficit, since McCain can, in a sense, be blamed for both halves of it. In other words, on the spending front, he favored the war that cost us so much money, A. And B, he now says he is in favor of Bush's so-called tax cuts for the rich. So it seems to me you can make a plausible case that you can blame McCain/Bush for a yawning budget deficit. At least it's a good enough case to pass muster in electoral rhetoric terms. What I haven't known is to what extent an economist would actually implicate the deficit in this unfolding mess. I genuinely don't know what the answer to that is.
I mean, I think the answer would be that with the deficit, probably not that much. I mean, the deficit probably, the deficit certainly primed and pumped to some extent, so it was partially responsible for the U.S. economy growing. And you can also argue that, the deficit, the fiscal deficit contributed somewhat to the growth in the trade deficit. Which is
and thus the falling of the dollar.
Right. Well, yeah, sort of. But, I mean, here's the thing. The reason Obama can't do that is because what is Obama planning to do once he becomes president? How many billions is what he's proposing in terms of spending?
Yeah.
He can't bash the Republicans for, expanding the fiscal deficit and then saying, and by the way, when I come to office, let me tell you about the health care, the hundreds of billions of dollars in health care that I'm going to pay for. He can make
he can draw a valid distinction between spending money to improve the health of Americans and by providing them this health insurance, make them better enable them to respond to the challenges of the global economy, blah, 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 compared to buying a bunch of weapons that you send over to another country to kill people with. There is a valid distinction.
Yes. And I think he actually did that in the debate, if I remember correctly. But you're right, he hasn't hammered it home. And part of the reason is he can't make himself... My point is he can't make himself out to be a fiscal hawk because he's not a fiscal hawk.
No, that's right.
So, I mean, that's... And furthermore, what he wants to do means he can't be a fiscal hawk.
Right.
I do think what he can do, is make the distinction probably between what he would call spending versus investment.
Yeah.
Because he'll say, rather than spending overseas, I want to invest at home. That would be the message that, I would imagine would work for him.
Mm. So I guess we should kind of wrap it up. We're closing in on 11 p.m. It's past my bedtime. But
yes.
So what do we think about this in closing?
Look, I've been wrong before. I hope I'm wrong now. As I really do mean this. I hope that the sort of bank runs that I've got playing in my head don't actually happen, and that it turns out that people have vastly exaggerated the downside of a failure to intervene. Because if that's the case, then hey, it turns out that it doesn't cost as much, and that the system can continue. I'm just incredibly skeptical that that's the case.
I think you and I agree that there's an opportunity for somebody like Obama, for various politicians, to exert a kind of leadership that could make a big difference and might, however frightened they are now of exerting it, might actually be to their political benefit in the end, right?
Again, the paradox is that for that to be the case, you have to hope that the American voter makes the connection between the failure of Congress to act, the fact that financial markets are melting down, and the fact that financial markets melting down might affect their pocketbook.
Well, don't a lot of people have like SEP IRAs and stuff, and they're like going over them tonight and realizing they just lost 10% of their...
I have studiously not looked at mine, I might add, for the last month for precisely this reason.
Yeah.
Because, But yeah, I mean, yes, that is a possibility. And I will say the other thing, which is, let's face it, the failure of leadership here is pretty significant. It's not just the Republican. The House Republicans deserve a lot of it, but what does it mean when the Treasury, a Republican administration or Republican Treasury Secretary can't get those votes? And what does it mean that the Democratic leadership was also able, only got 60%, which is not bad. But if this really is such a huge crisis, presumably you would have thought they would have had a little more party discipline.
You would have, although I'm not sure if you follow the assumptions of your very discipline, whether you would leap to that conclusion without first asking how they were perceiving things in terms of individual political interests.
That's true. Again, I've seen the numbers around, which basically suggest that the House members who were voting in, there was a contrast. The members of the House that are going to retire this year, which means they have no, electoral concerns, voted overwhelmingly in favor of the bailout.
Yep.
The ones who were in swing districts voted pretty overwhelmingly against it. Mm-hmm. So, yeah, that is pretty consistent with political science.
Yeah, I've always thought there was a case for limiting, say, Congress people, senators to 2 or 3 terms, Congress people to 4 or 5, just so that you would always have an appreciable number of people who weren't bound by the dictates of re-election. But anyway, so just finally in closing, what are some things you hope will be true at the end of the day tomorrow, which is Tuesday? Are there any particular signs? Of course you're hoping the foreign equity markets won't have completely nosedived. Anything else?
I'm hoping no banks go under. That's the primary thing I'm hoping.
So you think we could actually hear announcements tomorrow as a result of the vote in Congress today?
Again, my point is that if banks, if there's even a whiff, this is the problem with financial institutions, which is they operate, there's this willing suspension of disbelief that, that everything is fine. The moment you start suspecting that a financial institution is in trouble, then it becomes, and if you're not the only one and everyone starts trying to get their money out at the exact same time, that's a run on a bank. Mm-hmm. And so, it's not so much these institutions would in normal times be in trouble. It's the fact that these are not normal times anymore.
I think we agree on that.
Yeah.
Okay. Well, thanks for staying up for this late night taping.
No problem. Again, I hope I'm wrong.
I hope you're too nervous, and I hope I'm too nervous.
Yes.
We'll know before too long, I'm afraid.
All right.
Okay. See you around.
Yep. See you.
Bye-bye.